All right, let's get right into it. The financial world is, drowning in anxiety right now. But in the middle of all that, the investment giant KKR just made this incredibly bold, confident case. On their latest earnings call, they didn't just give us numbers, they laid out a whole philosophy for how to think about today's market. And they call it signal versus noise.
So what does that even mean? Well, the folks running KKR look around and see a market that's on the, quote, high anxiety end of the spectrum. It's just this constant drumbeat of bad news, negative headlines, and a whole lot of fear. That, to them, is the noise. But they're arguing that if you can just tune that out and focus on the hard data, the actual facts, a totally different picture emerges. And that's the signal.
And this one line from their co-CEO, Scott Nuttall, just nails it. The noise is bad and the facts are good. It's a direct challenge, really. It's them saying, hey, forget the chatter, just look at our results. So for the next few minutes, that's exactly what we're going to do. We're going to look at the facts, the signal, and see how KKR is trying to reframe what everyone else is hearing as noise.
First up, the signal. This is where KKR basically says, here's our proof. These are the numbers they believe speak for themselves, drowning out all that negativity. And I gotta say, the numbers, they're pretty wild.
For starters, let's look at their fee-related earnings, or FRE. The easiest way to think about this is it's the stable, predictable cash they make just for managing money. It's the bedrock of their business. They hit $1.15 per share this quarter, which is one of their best results ever. And what that signals is that the core business is just super healthy, no matter which way the market winds are blowing.
And the momentum? Whoa! In just a single quarter, KKR pulled in $43 billion in new money. That is their second best fundraising quarter in the history of the firm. So at a time when you think people would be cautious, pig investors are literally lining up to give KKR more of their money.
And look, this isn't some one-hit wonder of a quarter. If you look at the last 12 months, all their key metrics, management fees, FRE, net income, they're all at record highs. We're talking up a massive 16 to 17%. That's a huge jump. The signal they're sending is that this is a sustained, powerful trend.
Okay, so that's the signal. Pretty strong, right? But, and this is where it gets really interesting, KKR didn't just stop there. They went on offense. They went straight at the things that are freaking everybody out in the market right now. They tackled the noise head on.
For example, private credit. The noise, the thing you hear everywhere, is that it's this ticking time bomb, a huge systemic risk. KKR's signal, they come back and say, hold on, that's just ill-informed. They want you to see the bigger picture. The whole direct lending market is about $1.7 trillion. That sounds like a lot, until you compare it to the $145 trillion global bond market. It's a drop in the ocean. For them, defaults going up isn't a crisis, it's just things getting back to normal.
Here's another piece of noise. The idea that private equity firms just went crazy spending money at the peak of the market back in 2021. KKR's response is basically, yeah, that wasn't us. They pointed to their linear deployment strategy. It's a fancy term, but all it means is that instead of trying to time the market, they just invest a steady, consistent amount year after year. It's a discipline that keeps them from getting swept up in all the hype.
Okay, hang on. Before we jump to the next point, we need to quickly talk about a term you're going to hear, clawback. It's basically when a fund does well for a while, pays out big performance fees, but then its value drops later on. The fund then has to give some of that fee money back to the investors. As you can imagine, it's not something firms like to advertise.
Which is exactly why it's so fascinating that KKR brought it up themselves. They basically put their own bad news out there, talking about a nearly $350 million clawback from a fund that's over a decade old. They called it a one-time charge and made it clear this was an old, isolated issue, and then, and this is the key part, they immediately pointed out that their newer Asia funds are top performers. So they took a piece of definite noise and tried to turn it into a signal of transparency and long-term strength. Pretty clever.
All right, so we've got the signal, right? We've seen how they're handling the noise, but what's actually making all this happen? What's the engine behind the curtain? Let's take a look at the how, the strategies that are really powering this performance.
A huge, huge piece of this is their insurance business, Global Atlantic. And they're not just running an insurance company, they're totally re-engineering it. They're shifting to longer-term business, they're expanding overseas, they're using KKR's entire investment playbook to manage the money, and they're bringing in outside capital to grow even faster. They're turning what was already a big business into a global monster.
And then there's this. Just look at the insane growth in their funds for private wealth investors. 2 years ago, these funds had $6 billion in them. A year ago, it was $15 billion. Today, It's over $32 billion. That is an absolute fire hose of new, sticky capital that just makes their entire platform that much stronger.
So all of this, these record numbers, these big strategic moves, it all comes together in their final point. They have an incredibly clear and confident view of where they're headed.
You know, it really doesn't get more direct than this. During the call, the CFO, Rob Lewin, was asked if he still felt good about hitting their really ambitious 2026 earnings goals. He didn't waffle, he didn't hesitate, he just said an unreserved yes. That's the kind of confidence that just stops you in your tracks.
And this isn't just talk, they've got the receipts. Management said they have a clear line of sight to about $1 billion in cash from selling assets in just the next 2 quarters. To put that into perspective, that's the best forward visibility they've had since the peak of the market back in late 2021.
So here's the bottom line on that. Think of it like this. They're sitting on a mountain of potential profit. We're talking $17 billion in embedded gains that haven't been cashed in yet, the second highest level in their history. And they see a ton of ways to turn that paper into real money, whether it's through IPOs or selling companies outright.
And that just brings us right back to where we started, doesn't it? Management wrapped up their whole presentation with this statement. It's so powerful. They laid out their facts, their signal, and then just put the ball in our court, challenging everyone to decide for themselves.
So in the end, KKR is basically saying the choice is yours. On one side, you have their signal, record results, incredible momentum, and a clear plan. And on the other, you have the noise of all this market anxiety. It's a really interesting way to think, not just about KKR, but about everything we hear in finance. So I'll leave you with that question. When you're looking at the market, what do you see? Signal or noise?
Bye.